Hi, Clint Coons here with Anderson Business Advisors, and in this final segment on my Series LLCs, I'm going to discuss some of the problems or challenges you're going to face when operating with this particular type of structure. Now, if you recall from videos 1 and 2, we discussed how you would set these up. So you've got your parent LLC right here, and you have your individual series over here. And I had brought up that you could fund directly into an individual series. Let me just put SER here, SER. You could put a house directly into here, and here's your parent right over here. So you could deed your property directly into the LLC, series that is, and hold it there. Now, I gave you an example of how you would use a parenthetical notation in the bottom of the deed. Now, a lot of people have not done that. They've just deeded property directly into the individual series themselves and held it in that series name. Now, here's the thing about recording. You bring something down to the recorder's office, they'll record it. You can transfer it to an alien and they'll still record it. They're not going to check and challenge you on it. Their job is not to do that. It's just to record documents. Now, where this issue comes up, of course, is when you try to sell, because now you're going to have someone scrutinizing the chain of title and what has taken place. So when you deed property into a Series LLC, an individual series of a Series LLC, you got to be careful, because when you're deeding it directly to the series name, you're creating a cloud on title. And this came out about just recently for a client of mine who had done this in Oklahoma, which is another state that recognizes Series LLCs, set it up, transfer the title in, and everything was fine for 4 years until he tried to sell the property on a 1031 exchange. Now, when he sold it or he attempted to close on the property on the sale, automatic red flag came up and almost killed his 1031 because title would not accept this property being held in a series because they stated that they have no way to independently verify its existence. So they made him pull the property out, put it back into his own name, and then do the 1031 exchange. Now, obviously that could be a problem because if he's audited, the IRS may look at it and disqualify those funds and then make it all taxable to him. So this situation was created because title companies are uncomfortable with this structure. I only know of one title company in Texas that will accept title held directly in the name of a series. So when you're utilizing this tool, you have to keep in mind that titling poses an issue. If you're not using a land trust, if you're not using a parenthetical notation, which when I talk about parenthetical notation, remember you're still deeding it to the name of this parent LLC here, but you're putting in the bottom in the footnote, really we intend to have it held over here. A creative attorney might argue, forget about what's on the bottom of the deed, Your Honor. You only need to look at who the grantee is. And the grantee was this company here. Doesn't matter that their intent was to go somewhere else. If that was their intent, then they should have deeded it directly into the individual series. Now, of course, you're going to argue, I can't, Your Honor, because when I try to sell it, I'll have title problems. Well, whose problem is that? Is that a your problem or a me problem, is what the other party might state. And so now you're in a situation where you're dealing with, what I'd say, uncharted waters. You're trying to navigate those, and hopefully it's going to end up in your favor. So title holding with a series, bit of a challenge. Best to use a land trust. The other challenge we have in using a Series LLC is whether or not it's going to be respected. Now, I told you in the first video that you should never operate outside of the state where the Series LLC is recognized. And since there's only a handful of states, it really limits your investing opportunities with this particular type of vehicle. However, people still ignore this advice and they attempt to take a Delaware LLC and foreign file it in Florida and own real estate, and only to find out it doesn't work there because they don't recognize the series. So you need to keep it only in those states where the property is located. Now let's assume we did that. Let's say we stuck with Nevada, for instance, and we had all our real estate in Nevada Series LLC. They're all Nevada properties, and one of them comes under attack. So this one's under attack here. Who's to say a judge is going to respect this? Okay, they might look at it as one common enterprise because the names are so similar. So that's something else to keep in mind. When you're setting up these Series LLCs, it's probably a good idea to make the names, change names, and make them very dissimilar to one another for all the independent series so someone wouldn't say that it's confusing. We thought that it was all one and the same. So change the names, otherwise this could become a problem for you. Separately accounting for the income. You got to keep really good books. If you're not keeping really good books like I talked about in the second segment, then it would definitely be looked at one common enterprise. And where this can happen is that, let's assume that this property right here, there's more month left at the end of the money and you don't have the cash there, and here's your management company up here that's managing these LLCs. You're $500 short because of the expenses that came up that month. And so you take the money from this property that you generated here to fund the expense for this property. That could be an issue. So how would you address that? Well, you would just have to internally inside of your documents treat it as if you'd made a distribution to this parent company, and then this parent company, as the member of this, recontributed the cash to cover the expenses over there. That is something I'd want to see listed, that you just didn't pull from one account to cover the expenses on another property. You do that, someone could easily argue that if you're pulling money from here to cover expenses here and doing vice versa, then these basically one LLC owning both properties. So that would be, that's a commingling in essence between two separate businesses to have them looked at as one. So that's a challenge you're going to face when using this type of structure. And then the other challenge you're going to face is dealing with utilities. That is, who do you change the utilities over to? When I have my utilities in the name of this Series LLC here, that could be an issue, trying to get utilities transferred over to here, because they're going to look and they're not going to see that entity and they may refuse to do it. So that's been a challenge for people when utilizing the structure. And more importantly, you just want to make sure, like I said, you know your state's laws and you know what's required there. As I stated earlier, Illinois, each individual series has to be registered. So when we're deeding property into a Series LLC in Illinois, I feel more comfortable because the series is actually registered with the Secretary of State. The other states, there's no registration. So it's more of a nebulous structure that is created, and the only way someone can account for it is if they have really good books and records to back it up. And again, you have to remember that because this is relatively new, if you're going to argue it, that is, if something happens here, the judge you're arguing in front of has to understand the fundamental reason for using this type of structure. And if they don't get it, then you run the risk they look at it as one LLC. And that is always the Achilles heel in any type of new strategies that we come up with, is that if the trier of fact, the judge, does not understand it, then they're most likely to retreat to a safe place. That is one of knowledge that they have, which is just an LLC, and look at it as follows. So I don't want to scare you away from this structure. I just want you to go into it with your eyes wide open. It does have potential. I think in the future it's going to become more and more popular as other estates adopt it, and there's uniform rules adopted as well for using it. But at the moment, use it, understanding what its potential limitations are and its benefits, and make a decision and move forwards from there. My name is Clint Coons with Anderson Business Advisors. Take care. Wishing you the very best with your investing.